Well, hey, everybody. Welcome to Steve Couper's podcast for aspiring real estate investors. Today, I am super excited for my guest. We've got a real estate investing success coach, an active investor, and host of Let's Talk Real Estate Investing podcast. Debbie Balfour is with us in the house today. I'm so excited. She's built and scaled a diverse portfolio using multiple strategies, and now she's helping investors close fully funded deals by building credibility, by building trust and investor confidence before the deal is ever presented. I think that this is exactly what everybody needs to know about. I'm looking forward to hearing what you've got to say today, Debbie. Why don't you tell us more about yourself?
Well, a few years ago, 2023, I went through a major trauma. So I lost my home in the fire, and then 2 months later, I lost my job. So I had a total blank slate, and I felt like I had lost everything. Right? I was traumatized. I was down. I was depressed. And I thought, I've lost everything. Everything I owned, everything's gone. And but then I sat back and realized that I didn't lose everything because the house that was gone was actually leveraged, and I had like five investment properties that I had used that house to purchase. So I still had that, although I couldn't live in them because they were either too far away and they were all tenanted. So, so I thought, no, I haven't lost everything. And then the same thing with the job. Real estate gave me this opportunity where I I was already coaching for helping working with other coaches in their programs doing coaching for people there. And I thought, and I had just started with a business coach and how to set up my coaching business when this happened. So again, real estate, that knowledge of real estate and the desire to share with others and to become a coach, that became my mainstay. That became what I was going to do. Now it was like, okay, you're given this opportunity. Now go for it. There's no reason not to do it.
Cool, cool. Well, I look forward to digging into this more with you. Let's start off understanding what is that biggest misconception that new investors have about raising capital? And why does that misunderstanding get so many people in trouble?
So it's not just new investors. We have experienced investors doing the same thing as they run out of capital and as that they decide that they need to start raising capital. It's this misconception that you have to have the deal first. So they think that all their time and effort needs to go on the deal. So then they have the deal, and then they will look for the partner, the investors, etc., to go with it. And they feel that there's that I must have a deal first before I can even discuss capital. The other part is the deal is most important. I need to spend all my time and effort on that. And nobody will nobody will talk to me unless I have a deal, unless I have a track record of all these deals that I've done in the past. So those are all misconceptions. And the reason why I'm saying that is because what happens is they get the deal and then they have to go out and find investment partners. And if they have not already done so, if they have not done the groundwork already to create the pipeline of investors, all that time and effort is lost because they will lose the deal because they can't find investors in time. And a lot of time is not just time, but time is money. But it's also money because you probably did a bunch of due diligence. And depending on how big the deal is, that due diligence could cost you quite a bit. And I experienced that. It happened to me. For me, it was $67,000.
Well, I can tell you firsthand that I have actually faced this question in my, as an inner turmoil many times. Which came first, the chicken or the egg, the deal or the capital? And I couldn't agree with you more. Um, But let's talk about this a bit further then. So, when investors are evaluating an opportunity, many people think about those numbers. But in your experience, how much of the decision actually comes down to trust in the operator versus the deal itself from the investor's perspective?
Well, I use it, it's Pareto law is what I use. And I always say 80% of an actual investment, when somebody's investing in you, 80% is actually about the relationship. And 20% is the actual numbers. Because if you've got, you could have somebody with the best numbers. They're showing you all these projections with great returns, everything, all these things to go with it. And if you don't know them, but you've got your friend or your family member or acquaintance that you've known for quite a long time, that is showing you maybe a deal that's not so sexy, but you know that you can trust that person. You've known them for a long time. You know how they overcome obstacles in their life. You know that they're dedicated and they care about, they're going to make sure that they take care of your money. You will go with the person that's offering you maybe 10, 12% instead of someone that's offering you 50% and you don't know them from Adam.
Yeah, true enough, right? You need to actually have confidence that this in the person that you're investing with, right?
Definitely.
Um, so I think that you teach the right and the wrong way to raise capital. What are some of the behaviors or approaches you see that immediately destroy credibility with potential investors?
When you are in a networking event and you go up to people and as soon as you meet them, you start talking about yourself and about your deal and throwing numbers at them, they right away go, whew,
Yeah.
they just blanks, their mind goes blank, they don't want to talk to you anymore, and they're looking for who else can I speak to? Because you're just like all you're doing is being that used car salesman that we all know we hate buying cars because we're going to spend an hour, we're going to spend like an hour with this guy just trying to sell us everything on the blog instead of trying to find out who we are and what we need.
It's so true, right? I mean, that you've got two ears and one mouth. You should spend more time listening, right?
Yeah, so that's a big thing. Every day too, I do a connection. So there's the in-person throw things at you, but then it happens online too. Every day I get a new connection, totally new, connecting with someone, and the first thing they said, "Oh, I'd love to get on a call with you and tell you about my deals." Wrong, wrong, wrong.
Way to
Right
go.
away I go delete.
Yeah.
And I'm sure I am not the only one.
So, I guess that we should circle back around to this, but I mean, a lot of investors, they talk about screening deals, but experienced operators also screen investors. So, what should people be looking for to ensure that an investor is actually a good partner for the long term? What are you looking for there?
Well, that's the part where I say relationship is so important because you're not going to find out that right away. It's over time. So you're looking for someone that has the same values as you. You're
Mhm.
looking at someone that understands the strategy that you're doing and it appeals to them. You're looking for someone that is actually not just have the money but they also are in it for the longer term because when someone's investing with you, you don't want them to desperately need that money right away or in a set time because we all know that things happen in real estate. Markets go down, tenants decide to move or not to buy if you've got a rent to own, all these different things that it could happen. So you don't want them to say, look, I need that money back in 5 years. That's it. I'm investing 5 years and I need that money right back right away because it may not be 5 years. You may still need it for 6 or 7. So there's a number of different things. A lot of it first needs to be the values, the communication, that will come for that. And that's why that relationship is important, not just for that person with you, but for you with that person, because you want the right investor, not just someone with money.
It's not a marriage, but it's close.
Exactly. It's very much like it.
Let's talk about communication and the discipline around that. So once somebody entrusts you with their capital, what communication habits separate the great operators from the ones that you never want to work with again? What are your thoughts there?
So I see this a lot, and I see it with in my own investments where I invested with other people. As soon as they got my money, communication ended.
Hmm.
And only when a problem happened did I hear about that. But once you have that investor, you want to nurture that investor. You want to let them know what's happening on the investment they're in with you. So they keep that excitement. But and also when things are just starting to go awry, it's not a surprise. And they know what you're doing and they're with you, what you're doing to overcome that obstacle. But even if it's a perfect investment, the best investor, like we talk about, you talk about this in retail, that it's easier to keep the customer that you, it's cheaper to keep and easier to keep the customer that you have than get a new one. So why don't investors nurture the ones, the active investors nurture their investors that they have right there with them? Because you're the best, they're the best person to reinvest with you. If you nurture them, you keep that communication, you send them, you send them little birthday cards or Christmas cards. You acknowledge, thank them for being part of it. You have maybe a monthly or every 3 months, just a little gathering, but you're recognizing them and you're keeping that communication because they're going to be the first ones then that you're going to go back to. And if you were good to them, of course they're going to invest with you, but they're also going to refer other people to you.
There it is. That's the sweet sauce.
Yeah.
I like that. So tell me, and that idea of the get together is one I'll try and follow up with everybody. Sorry about that. So let's talk about red flags that investors should watch out for. So if you're advising a passive investor today, what are the three red flags that they should watch for when somebody's raising capital for a real estate deal?
Well, the aggressive attitude, because it's this like it's the I want money attitude instead of there's plenty to go around, I'm giving you this opportunity. That desperateness is usually a red flag because if they're desperate, they're not actually understanding your needs and qualifying you properly,
That's
right?
a good one.
Yeah, so that's definitely one. I mean, the, there's also ones on looking at the investors that are raising capital and looking at what other projects they have.
Yeah.
Now, from my own experience, that I will not, it's nice to help that one person that is just starting out. And if that's a joint venture partnership, like something small, that's okay. But if you're going into a big, complex deal, a development, and you're being a partner in that, if you're looking at that person's history, they should have had a completed project that they've done before that's in that scale and that people have been paid out. At least one completed project. Because if it's their first time doing it, you don't have that track record with them. Right. So that's a big one, another one. And then the other one is, are they doing multiple developments at the same time?
Mm. Yeah, exactly. Did they overstretch?
Yes. Are they over leveraged or are they growing too fast, too quickly? That's another one because how can they concentrate on that one project if they've got multiple? How can they start seeing red flags? How can they stay up with the city's demands, with following up with the cities, with following up with things to make sure things are moving forward if they're on multiple.
It's a lot of work. I know this firsthand. And so therefore, making sure that you're on top of things is very demanding. So if you've got too many things on the go, it's going to be a real stretch unless you've got a really competent team helping you for sure.
Definitely. And in the conversations, I would say is that a lot of people just want to hear the numbers,
Mm.
but we should be actually talking about the risk mitigation,
That's the big one for me.
not just ROI. Like
That's
ROI
the big
is
one
the
for me.
icing on the
Where's
cake.
the buffer?
Yeah.
What's the cushion?
How are you going to secure at least the capital that I've given you before you start talking about the returns that I'm going to risk to you?
Yeah, yeah. That's it. That's what it's all about.
Yeah.
Hey, okay, let's talk about reputation. Now, in the capital raising world, reputation compounds like capital, right? I mean, it's something that builds over time. What are the habits that build credibility over the years rather than just closing a deal?
So, number one is visibility. We need to start with visibility. You need to see that person often. You need to be visible. You cannot raise capital if you're invisible. If nobody knows you, how are you going to raise capital?
Yeah,
So you need to be visible and you need to be consistently visible, not just, oh, I've just put something on a conditional offer
yeah,
and then you've disappeared. And then you don't know what happened with that conditional. So if that person didn't close on it, it's gone. Or, oh, I've just successfully done this. That's not enough. Visibility needs to be you're consistently visible, and then visibility turns into credibility when you are sharing your story. Like it or not, social media is our platform today. This is the way we all operate. When we go to a networking event, we go back and we find people on social media. So even if you've done in person or a virtual, you're going to find people on social media to understand, are they who they say they are? But if you can't find them on social media or they're sporadically, you found something in 2022 and something in 2025, right? Right away, you've lost them. So if you've gone to networking events and you don't have a social media and you don't understand why people have ghosted you after you had a really great conversation with them, that's the reason why. So we need, and credibility is built on social media by showing your story, not just your successes, but the way you think, what you're doing, how you're doing your due diligence, what problems have you faced, and how did you overcome it. That's better than a person that's never had any problems.
it's true. How we solve problems is how we protect capital as well.
Yeah.
There have been many changes. Many things are the same, but many things have changed over the last 5 years in the world of capital raising. Right? You mentioned social media becoming more and more present. AI is now in our mix. How do you see the capital raising landscape evolving in the next 5 years? What skills will operators need if they want to earn investors' trust in a more sophisticated type of market? I mean, you and I are guessing at this, but what are you thinking in your mind is the future of capital raising?
Well, in 2020, people were just throwing money at other people. Money was like water out there. The banks were throwing it at lower interest rates. There was money going around, and then everybody could be successful because everywhere in Canada, house prices were going up.
Everybody.
Everything was increasing, right? But then 2022 happened and interest rates and government regulations and everything else affected all investments that were out there. And a lot of people lost money
Sad truth.
because of this, right? I mean, I'm struggling on keeping my ones afloat because of these things. Like I'm constantly having to change strategies, change what I'm doing in order to keep things afloat. So because people have lost this money now with others where they weren't properly qualifying who they're doing their due diligence. There was just, oh, Steve's a nice person. I met him at a few, he's always on social media. I met him at a few events. Yeah, he's a good person. I'll invest with him. Right? That was the attitude I thought. And I'm saying this because I was one of them saying that too. Right? But now that people have been burnt, and if you haven't been burnt, you know of friends and family that have been burnt, right? That have lost a lot of money. So now people are very skeptical. They still have money to invest, but they're now not as easily convinced to invest in it. And so this is where you really need to do those things that I'm saying. You need to show them that you are credible, and you have to show them your journey. You have to show them the things that you're doing, because going to them as the people have done before and just come on my webinar, I'm going to give you a pitch deck and I'm going to tell you why I'm so great and why the numbers are so great and why the market is so great, all in 1 hour. And then I want you to, give me a letter of intent and come and then let's get into deal. That's not going to fly anymore. And people are also, with AI, people are also skeptical about, is this real? Is this a scam? So people are looking for authentic people. So just you don't have to be perfect. They're actually looking for the imperfect, because then that tells them that it's not AI. If I'm doing ums and ahs and you knows and likes and those kind of, as I'm talking, they know I'm not an AI. But when I'm perfectly fluent, maybe I'm an AI.
Chances are you're a robot. Okay.
Right? But they want reality. People are craving now authenticity because they're questioning that, and authentic relationships. And they need it, it's going to take more time. So expecting to get a deal and close it within a month, 2 months, and find investors for it when you haven't done any of the groundwork before, it's not going to fly.
I think you're right with all of that. I think it's very noble what you're doing. So let's talk about your coaching program. What are you doing there?
So I do exactly that. So what I do is work with people to first build visibility on social media and professionalism, but also authenticity, so that people start, the more people see you, more people think they know you, and they haven't even met you yet. I've gone to so many, real estate events where people come rushing up to me. Oh, Debbie, I've wanted to meet you. And I don't know these people at all because they've just been lurking. But because I'm visible all the time, they know about my sons, they know about everything in my life, about what I'm doing. So that's a big part of what I do, is I work with them to first make their social media, to optimize their social media so people know who they're actually helping
Mhm.
and how they're going to help them, and then how help them with writing posts and videos and getting out there to do that visibility and build that credibility, but also in the background help them and for the in-persons and how to have those conversations when you're networking, so that you're not going straight to the pitch. There's a warming up you've got to do, right? So you've got to do that, and then you have to nurture through emails. So nurturing through emails, it's a whole process, and how to automate that, how to make sure you're following up with people timely. All of those things we work with together, and even also, like I said before, nurturing the people that you do have, but qualifying too. So how do we make sure that we're having the right conversations with the right people? And when you're busy, when you're doing this on the side of your desk, so to speak, when you've got a full-time job, like most people, like yourself, Steve, you have you've got a full-time job, and you're also doing this because you're doing this to eventually get out of the full-time job. You don't have a lot of time on your hands. So you're wanting to have conversations with the right people. It's not that you're being, it's not that you're trying to say, well, I don't want to talk to you, but maybe this person, if this person is another active investor, maybe you won't spend as much time with them as someone that you know is a passive investor and is the type of investor that you want to work with. So being able to qualify those early and have set aside the right time to spend with each person, that's important.
I think it's critical. Couldn't be more right. Yeah.
Yeah.
Debbie, we're getting close to the end here, and I'd like to ask you a question. Um, what is your why? What is it that's driving you forward here? How are you, I guess, what are your goals, and how are you going to know when you've succeeded in those? What is the measure of success to say, I'm done, I've got it?
When I can start doing what I'm doing because I just purely because I enjoy it, and I can pick and choose, when I want to do it. That's when I'll know that I'm successful. That there isn't oh, I have to. Can I pay for, my expenses this month, or when I have the lifestyle that I really want, and I'm doing it for enjoyment.
Very good.
That's
Debbie,
that's really when I'll
it
be
has been a
successful.
huge pleasure having you on the show. How do people reach you if they want to find out more?
So they can find me on LinkedIn. I'm on LinkedIn. I'm on Facebook. Uh, Debbie Balfour REI Coach or something like that. I think it's on LinkedIn. But I'm on LinkedIn. I'm on Facebook. You'll recognize me with a big smile. And I'm also on YouTube. So I'm also a YouTube podcast. Let's Talk Real Estate Investing. So they can find me there. And they can find me on at debbiebalfour.ca.
So many ways to reach you. That's wonderful. Debbie, it's been a huge pleasure. Now, before everybody goes, I want you to hit the like button, please. If you aren't subscribed, please do so. And I think if you like this video, you want to share it with your friends. I won't be upset, neither will Debbie. Please do.
Steve, there is something I want to offer people is that my group, the Real Estate Investor Success Hub, it's free to join. Just answer the membership questions, and there's so much training. Especially, you get it under my post, but you can go into guides, and there are actually hours of recorded training in there. So that's a good place to start getting free training.
Oh, wonderful. So generous. Debbie, it's been a pleasure. Thank you so much for joining me. I'm so glad you came, and I look forward to hearing all about your success. Have a great day.
Thank you for having me.